Hello, everybody, and thank you for joining me today. It's Alan Barry Labucan with the Rocks and Stocks News Show. This is my weekend edition on the 9th of November at 3:30 Central Time, or at least I think that's the time I'm on. Down here in Mexico, where I live, we don't change our clock, so I think it's 4:30 Eastern Standard Time. Okay, got a big show ahead for me today. I've got my topics that I'm going to talk about that are all very bullish for gold, which is why gold will be the background for this show. Then I've got to talk about some takeovers that have happened. Something big has happened in Mexico that I'm going to talk about. I got a brief update on my unicorn picks. I've got a new addition to my top of mind picks and a new major precious metal company to talk about. Then I've got some changes to my explorers. I've got one to remove and one to add. And then I've got some news releases to talk about. So I better get right to it. Valuations never matter until they matter, and then they matter a lot. I'm seeing signs that investors are starting to give the side eye to the extreme valuations in the Mag 7 stocks and the whole AI sector. More bearish comments are coming out about the AI stocks and their spending, which is taking up a big portion of their top line. Then there is the circular accounting issue that is a growing concern. An even bigger problem is after spending on the capex to build out the technology, how will they make money? As most users want AI tools for free or at a very low cost. A couple things that seemed to shake the AI stocks this week were comments from OpenAI about the topic that they may need the government to guarantee their debt, going as far as saying they may reach a point that they will be too big to fail. Those are some alarm bells people should pay attention to. It wasn't long ago their CEO was in the White House promoting all the investments they would be making into the US economy. If they need to borrow and have that backed up by the government, it makes me wonder, makes one wonder about how realistic the numbers being thrown around are and if they will happen. Another blow to the published valuations in the AI stocks was when Michael Burry of the housing bubble short fame announced that he went all in on shorting Palantir and Nvidia. I think it's making up about 66% of his portfolio now. This angered Alex Karp, who is the Palantir CEO, who went on CNBC and lambasted Michael Burry shorting his company to the point of calling it batshit crazy. To make his argument, he talked about numbers, highlighting the numbers he liked, but didn't mention that they are trading at over 85 times sales and over 200 times forward earnings. His outburst was more of a tell that he was not as confident as his bravado suggested. Since the announcement, Michael Burry has done very well on his position, but I don't think his math had him looking for a 10% or so gain. Time will tell if Alex Karp or Michael Burry is right. It seemed that what caused the high flyers on Wall Street to wobble of late was when the Fed announced that a December rate cut is not a foregone conclusion after their recent quarter point cut. When valuations are priced for perfection, it often doesn't take a lot to let some air out. I think the December meeting will see a cut. The warning was Powell et al. Sending a message that they are flying in the dark with the government being in a shutdown as they can't get their favorite Fugazi numbers from them to plot their dots. Now, it does sound as if is some positive movement on getting the government back in business or spending and creating debt as of maybe as late as tonight. We'll see. It is laughable that the Fed depends on government numbers that constantly overstate jobs and the economy while understating inflation. But those are the smoke and mirrors numbers they say they depend on for interest rate policy. They also say they are laser focused on their dual mandate, which is suspect as well. They have been talking for years about their 2% target for inflation. But while inflation is at 3% using inaccurate government numbers, they're lowering rates, not raising them. It seems that they have decided that the full employment side of their dual mandate is a bigger problem than worrying about spurring on more inflation. In 2024, I reported many times that the jobs market was much more troublesome than the government numbers were indicating. What had set off alarms for me was that workers were losing full-time jobs and needing to take on two or three part-time jobs. This was well before they revised the jobs numbers down by close to 1 million jobs. That trend of weakness has gotten worse, and now the jobs market is falling off a cliff. Recently, Federal Reserve Chairman Jerome Powell stated during a press conference on October the 29th, following the FOMC meeting, that, and I quote, job creation, if you adjust for likely overcounting in the way that BLS does its work, it's pretty close to zero, end quote. So it's not very often that when the Fed is always talking about plotting its dots and talking about jobs numbers, that he's recognized that that the BLS is putting out a lot of numbers that are later revised down and significantly overstate or overcount, as he states. Um, Additional signs of weakness in the labor market come from consulting firm Challenger Gray and Christmas, who mentioned that U.S. companies laid off 153,074 employees in October. That nearly triples the number of job cuts in September. So, the chairman Powell tried to say that it's not a foregone conclusion for December. It's a foregone conclusion. I think that statement was more about pushing the government to get back in business so they can get their fugazi numbers that the government statistic. The Fed has decided that they need to throw inflation under the bus to support the jobs market, but a quarter point cuts are not going to be effective in stopping the trend as it's gaining momentum. As you can see by the comments by Powell and the report by Challenger, Gray, and Christmas, before or at last meeting, they said it wasn't a foregone conclusion, but these comments and studies by Challenger, Gray, and Christmas and statements by Powell certainly suggest that it is a foregone conclusion, and I would guess that even 0.5% might not be off the table. Closing the border and deporting many takes cheap workers that companies and consumers depend on to make the stuff that consumers want for the price that they want to pay. Plus, it also takes them out of the economy as consumers, which causes the cost to employers to rise and also weakens the economy. This is, some of the reasons that I see stagflation rearing its ugly head. Consumers are strained, which can be seen in the subprime auto lenders having serious issues, which puts pressure on the regional banks. Of course, Powell said he doesn't see this as a concern, But the Fed overnight lending has spiked, so maybe it's a more of a concern or should be concern. Kind of reminds me of when they say that that inflation is transitory. I think you want to pay more attention to this subprime auto lenders, people that really can't afford cars are getting cars, and that puts pressure on the regional banks. In the recent Fed meeting, they announced that they would stop quantitative tightening, or QT. To put that into context, when they started QT, their balance sheet was sitting at around 9 trillion, and they wanted to normalize their balance sheet. They have only brought that down to 6.5 trillion, and now as their debt positions expire after December 1st, they will roll it over into the short end of the debt curve. Even they don't want to lend the government money for the long term, which speaks volumes. If that sounds like the start, if that sounds like the start of them moving towards QE, it certainly should. Based on the topics mentioned earlier, the consumer sentiment for economic growth and inflation have dropped to levels that are only seen during recessions. Consumers feel the pain of the real economy, not the fugazi government numbers that overstate jobs and the economy and understate inflation. They know a lot more about the real economy and real inflation than the nonsense coming out of the Fed's dot plots. And this has a way of being a self-fulfilling prophecy. When consumers are worried about the economy, their jobs, and inflation, they pull back, which leads companies to do the same. There were elections this week, and plenty of elections that gave the Democrats a resounding victory. And what resonated with voters were politicians that talked about affordability. You look at the wages and the inflation, and if they have to put all their more money into, let's say, something like healthcare insurance, that means that everything else in their spending is unaffordable. So this affordability issue is become going was a big topic in these current elections, and I think they will continue to be going forward. What helped Trump win the White House and the Republicans take over the Senate and Congress was the angst voters had about economy, jobs, and inflation. They haven't delivered on the promises, and voters went to the poll this week to again voice their displeasure, which foreshadows what will happen in the midterm elections in 2026. Inflation has not cooled. It is far from transitory and growing higher, excuse me, is growing higher as the tariff tax is working its way through the supply chain, and it's building into a cascade effect. Now that the Fed has decided to throw inflation under the bus to come to the rescue of the jobs and the economy, the inflationary pressures are building. The result is that stagflation is on a path to becoming much more problematic. It is very risky to let the stagflation genie out of the bottle because the Fed has no tools to fight it. If they cut rates to bail out the jobs and the economy, then inflation takes off. The fact that they have to make the decision to ignore inflation despite it being 1% above their target rate to support the jobs market and the economy is overwhelming proof that they have failed at both mandates and let the stagflation genie out of the bottle. The last time the stagflation genie was left out of the bottle was in the 1970s. A big difference between then and now is that there wasn't a death spiral of debt made worse by the unsustainable cost of servicing the debt. This current round of stagflation could be much worse than the last one due to the death spiral of debt. What has happened since abandoning the gold standard, it allowed the debt and spending junkies on the left and right in America and throughout the world to run amok, taking the shackles off them to print money like it is going out of style and build, and gold would kind of say it's going out of style. Uh, I digress. And building the death spiral of debt has resulted in a broken fiat currency and debt system. The only way to repair it is with gold, or they could default, but that would lead to gold being the new standard of post default. So, either way, gold is the answer. Many central bankers have figured this out, which is why they own more gold now as a group than they do US debt. Think about that, folks. They're moving away from US debt and the US dollar, and they want to own more gold. That in itself tells you that there is big problems with the fiat currency and debt system. Gold and silver recently reached new record highs and then gave back around 10% of the gains, as you can see in my on the chart there. Got up to just shy of 4,400, currently trading at 4,007 on the futures. I find this really impressive that after that Jackson Hole, Wyoming meeting, when Fed Powell played his cards, showed his cards, and said, we're going to start cutting rates, that the the gold market went on a tear because I think that it sees that stagflation is coming. Now, after such a big run, you're going to see some profit taking, but that's been very mild relative to the run. I mean, it ran up about $1,000 per ounce, and it's only given back about 400 of that. From a technical perspective alone, that's very bullish. I also love to see when it coils up because it's coiling up for its next rally. Okay, not, but the bigger point I want to make is that nothing has changed concerning the reasons that gold went up like that, or silver had its great run above 50, around $54. There is still a death spiral of debt and unsustainable cost of servicing the debt. The debt and fiat currency system is still broken, and the politicians in Washington keep making worse with their addictions, both on the left and right, to spending and creating debt. Foreign central bankers are still loading up on gold as they don't want to own as much US dollars and US debt. The jobs market and economy are struggling, and the stagflation genie is out of the bottle. I hope that some of the recent softness in the overvalued tech stocks, Mag 7, and AI stocks has investors looking for alternatives. But with this massive supply of debt that keeps growing, the bond market looks more like a suspect than a prospect. So, what is an investor to do? Look to the past to help direct their future. The last time there was stagflation, gold and silver and the precious metal stocks were superstars, and they will be again. I hope many more generalist investors start seeing the light and positioning themselves for what is coming by protecting their wealth and purchasing power by owning healthy to overweight positions in gold, silver, and precious metal stocks, because that old formula of the 60-40 portfolio doesn't seem like a winning one. I would suggest that you want to switch that 60-40 portfolio dramatically, and maybe 60% should be in gold, silver, precious metals, and 30% I would say is in looking for would be better off looking outside of the US into big cap stocks, international stocks that are trading at low relative valuations. That seems much better of an allocation, and maybe 10% left in cash looking for opportunities. As I mentioned earlier, as I was preparing for this show, the government shutdown looks like it might be over soon. We'll see. And then crazy stimulus. Trump is talking about a $2,000 stimulus money going out to consumers that are not the rich in the country. Um, it wasn't supposed to be a tax. Those tariffs weren't supposed to be a tax on consumers. So why does he have to give them a tax rebate with this $2,000 stimulus? All right. So those are my topics for today. Um, I'm just going to make myself a quick note here. Uh, just three. Okay. So the next subject is takeovers. We have been seeing a lot of takeovers of late. One of them was Coeur Mining taking over Newgold, IAMGold taking over Northern Superior, Fresnillo PLC taking over Probe. A couple of those were in the takeover targets are in Quebec, and one of them is sort of British Columbia related. So, what can we learn from this? Well, the miners are making money hand over fist, and they're finding smaller companies that are undervalued. And earlier, I started this whole thing off by saying that valuations never matter until they matter, and then they matter a lot. The valuations are starting to matter when it comes, the extreme valuations and premiums are starting to matter when it comes to the tech stocks, AI stocks, Mag 7 stocks. And I don't really think that they've become to matter yet in the miners. And I'll give you a couple sample examples of that. But what it tells me when I look at these takeovers is the majors are flush with cash, the big miners are making money hand over fist, and they're taking advantage of the undervalued price of the smaller companies. That's a good recipe for investors to look at. Doing the same, you can either position yourself a little bit with the bigger companies and then also be looking down the food chain like they are to use how they're using their money is a good way for you to think about it as well. Okay, so now I want to talk about uh, my Mexico picks. And why do I want to talk about that? Well, on Friday afternoon, there was an announcement out by a company named Silver Tiger. And what the news was that they got their permits for their open pit mine in Sonora, Mexico. There's been a lot of trepidation about permitting in Mexico since the new president took over. I think it's a little bit less than a year ago. Well, we've started to see those permits getting issued because she did say that she was not opposed to mining gladly because it's a really important part of the Mexican economy. And I told people that I didn't see any problems on the permit front, especially for the underground miners, but this was for a open pit. And so this is big news and great news for those watching the companies that are awaiting permits in Mexico. The news release went out on Friday afternoon and should be bullish for Mexican companies when the market opens tomorrow. I haven't done enough homework on Silver Tiger to really, formulate whether or not I want to make them a pick or not. It is on my radar screen, and I will be watching it closely. I wanted to talk about this news in this show as I think it will have a bullish effect on the Mexican companies, such as my picks, Vizsla Silver, Luca Mining, Sierra Madre Gold and Silver, Kootenay Silver, Mithril Silver and Gold, as well as Pacifica Silver. Some of these are waiting on permits, like Vizsla Silver, underground permit. They already got their permit to go underground and take a bulk sample. So I think that they're probably high on the list as well. But I think it could also have a positive effect on companies like Luca Mining, Sierra Madre Gold and Silver, Kootenay Silver, Mithril Silver and Gold, and Pacifica Silver. Watch all of those closely on Monday because I think it will be a somewhat of a sentiment shift towards this could be the catalyst for a sentiment shift towards the Mexico companies. All right. So now I'm moving through things quite nicely. I think I'm going to get to all my topics today, folks. I'm pretty happy about that. Okay, so I wanted to now move into talking about my 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 list of picks. Okay, so I've been moving some things around, and I wanted to make things a little bit clearer. So I have a group that I call my unicorn picks. I have another group that I've called my top of mind picks. I've got my major precious metal miners. I've got my mid tier gold miners, my junior gold miners. I've got my developers. I've got my gold explorer with an important high grade discovery. And then I've got my explorers. And I'm going to be moving some around and I'll tell you what I'm doing right now. Um, on my unicorn picks, no changes to my unicorn picks. They still are Vizsla Silver, of course, for their silver, McEwen Inc. for their unicorn copper project, Goliath Resources. They are a unicorn gold discovery in the Golden Triangle of British Columbia, and Amex Exploration, which is a gold developer in Quebec with a tremendous project. Why I call those unicorns is that I get this from the tech stock industry or the tech stock Silicon Valley area where they talk about companies that have had huge success and they call them unicorns. Well, I think that all of these companies have projects that are unicorns and can bring them to great success going forward. In the case of Vizsla Silver, that is their Panuco project in Mexico. It is a phenomenal high grade project. They've done a preliminary economic assessment on it. It's going through a feasibility study now. They are constructing an underground ramp to get into where they will take a bulk sample. This is important for two reasons. One, they will stockpile the bulk sample so when they bring the project into production, they start with that stockpile. Secondly, this is a not an exploration ramp, it's a production ramp. So when they're ready to go into full production, they've already got a jump start on that. And when you look at the economics of this project, they're quite phenomenal. If you use prices around current prices and you look at their cost of production, they're going to be a free cash flow machine. I also have to thank them because they are a sponsor of my work, which makes all of my reports and all the work I do is these sponsors are important to that work and enabling me to produce the work I do for free to my audience. And so Vizsla Silver is a sponsor. I'm very happy to have them as a sponsor because it's nice to have a sponsor that I can consider having a unicorn project. And to test me on that, I would invite you to go to their website and look over their preliminary economic assessment and their corporate presentation, and I think you'll understand why. Another way for you to do your homework is I've done a lot of interviews with their management, both Michael Connor and their VP of Exploration, Jesus Valador. And I would invite you to check those out on my YouTube channel. Just do a search for Rocks and Stocks News. You can also find all of my reports, including the times that I've talked about Vizsla, on my Substack at rocksandstocks.substack.com. Okay, another of my unicorn picks is McEwen Inc. for their copper project in Argentina called Los Azules. Los Azules is one of the 10 top undeveloped copper mines in the world. Great news recently was they did a feasibility study, and their all-in sustaining cost for their copper production is $2.11 per pound of copper. Copper is trading north of $5 per pound, and I think it's going a lot higher. So when you consider that they would make a lot of money, about $3 per pound, they would be producing about $400 million or 400 million pounds per year. That equates to approximately, well, $1.2 billion of free cash flow per year. It has uh, a 30-year mine life, so that's a lot of free cash flow years. And they look to start construction in 2029. So it's not that far away. I'm also a fan of their gold projects, specifically their what is called their stock mine that is in construction and going into production in the first half of 2026. Another great project that they have is their Grey Fox project in Ontario. I think that that one is their cornerstone mine of the future. So they've got growing production on their gold side of the business and bringing down their cost. So, and they're doing a lot of exploration work as well in Ontario and Nevada. They got a mine that they're going to try and bring back into production in Mexico. So again, here's another one that could benefit from that recent permit in Mexico. Okay, so that's the McEwen mining story. Oh, I'm supposed to be looking at their stock charts. Sorry, I didn't do my stock chart analysis. Let's go to, I'll do Vizsla first because I talked about them first. Let's have a quick look at their stock chart. This is their US listing. So these are all in US dollars. Um, they been on a really nice run since over the last year and a half or so. And that has a lot to do with the economics of their project. Like a lot of precious metal stocks, they've come down in the last week or so. They're now trading just below their 50-day moving average. The last time it did that was in right around here. And before that, here and here. So, yeah, do your homework on Vizsla. Let's have a look at MUX. That's McEwen. Might as well look at their US listing as well. So, as you can see, of late, they've been on a pretty good run. They came down with a lot of the metal stocks of late, but they've had just three really great news releases, one after another. One was that they've sort of joined up with the International Finance Corporation, which is part of the World Bank, and that is potentially moving towards part of the funding for the Los Azules mine. Then they got their RIGI acceptance. RIGI is a program put together by the Argentinian government to make open up their arms to large investments into the country, like a Los Azules mine. And so that was another really positive. And then they did the feasibility study. So I'm not too worried about this recent weakness. I think it's more related to the overall metal stocks than it is company specific. And by the way, I'm also scheduled to interview Rob McEwen on Thursday of this week. All right, Goliath Resources. They are a my unicorn pick as a gold explorer with an important high grade discovery. It is exceptional. And how I best tell people to visually understand why it's so impressive is if you look at they have maps in their presentation as well as in their recent news releases, and it shows a map that has the drill holes plotted and where there is occurrences of visible gold in their sound in their drilling. And uh, it is quite astounding. The area that has this widespread visible gold in the drilling extends for about 1,200 meters in one direction, close to 1,000 meters in another, and then depth-wise, it has about 800 meters of vertical relief. So inside of that, they just got a massive amount of visible gold in the drilling inside of that. And inside of that area, they got a series of stacked veins. And what I find really intriguing about that is there's a series of stacked veins that go one direction and another series that go this direction. Now, the Great Pogo Mine in Alaska is a series of these stacked, gently dipping veins that are also full of high grade gold. I never saw the distribution of visible gold because they've been run by majors and they don't publish that. But if you look at the grades, there's a lot of grade similarity between Pogo in both of these sets of stacked veins. So one set they have like 12, and in another set they have like five or six, and they go in opposite directions, which brings up the question of where is the feeder for these two? There could be coming from two separate feeders, or there could be one big magma chamber underneath. And think of like the sides of a ship or the sides of a bathtub, and that's feeding these two sheet series. Um, and then up in between them, which suggests that there's a magma chamber underneath there, is a series of reduced intrusion related gold bearing dikes that are vertical in nature. So you've got these stacked sheets, and then up comes these vertical um, veins or vertical dikes. And it's really just, these things all combined are why I call it a unicorn pick. I'm a shareholder of the company. And do your homework on Goliath. Okay, the next one up is Amex Exploration. And this is another one of my unicorn picks that just so happens to also be a unicorn. And why do I call this one a unicorn? Well, they've got this project called Perron in Quebec. It has a series of deposits on it that have gone through resource estimates. The one that is the driver of the future is called the Champagne Zone. And the Champagne Zone, I just talked about it in an interview with their CEO and their VP exploration. And so I'm not going to go into a great deal of detail, but it's vertical. It's got a fabulous grade of average grade of 16.2 grams per ton of gold, and it has over 850,000 ounces with that grade in the measured and indicated, and another couple 100,000 in the inferred. And they've got a great plan to bring this into near-term production. One of the steps along the way is for them to do a bulk sample. They're talking about, 20 to 40,000 ton bulk sample. And with that fabulous grade, it it's got the potential to be a moneymaker. Plus, it can be processed nearby because they're in the Abitibi and there's a bunch of mills around there within a 100-mile radius or so that could process that material for them. And then in addition to that, they're planning on doing a toll milling. They're doing the economics on a toll milling operation. So what that is just like the bulk sample, they process the material, they take it to a nearby mill, they have it milled there, recover the gold, and then they use the profits from that to build their own mill at the Perron project. I love this path to production. And I think that the company has a great future ahead of it. There just are not very many high grade development projects like this anywhere in the world, let alone in a mining friendly jurisdiction like Quebec. So that's the Amex story, and I advise you to take a look at that. Okay, so now I'm going to move to what I call my top of mind picks. So these are companies that are doing things that have my attention and I'm following them very closely. Okay. So this one is Sokoman Minerals. And as you can see in the stock chart there, it blasted off recently. The reason for, oh, by the way, I'm a shareholder of this company. The reason for that is they changed management. And they brought in a real superstar in exploration. His name is Denis Laviolette. Denny was instrumental in getting Newfound Gold, all of its ground, and finding a lot of ounces. And they recently changed their board to a bunch of mining guys because they're going to build that into a mine. And so Denny's an exploration guy. He loves Newfoundland. He looked over a lot of opportunities. Denny's the kind of guy that could go to work practically wherever he wants. He chose to be the CEO of a tiny little exploration company that, as you can see, was quite struggling at around a few cents a share. It's come to life of late because Denny's gotten involved. Plus, they acquired a whole big package of land around the Moosehead project in Newfoundland. And then they did about, I think it was a $26 million financing. So now they're loaded up with cash. They got the great Moosehead high grade gold discovery in Newfoundland that is needs a guy like Denis Laviolette exploring it. Plus, they acquired a whole bunch more ground that's highly prospective right beside the Moosehead project. And now Denis Laviolette has the money to roll up his sleeves and really get active. So I think you're going to see a lot of news out of Sokoman. I'm a big shareholder in the company. I love what they're doing, and I advise you to take a look at them. Okay, another one that's on my mind a lot lately, and I'm also a shareholder of, is a company called Sterling Metals. Now, Sterling Metals, as you can see, it also just blasted off of late. And why was that? Well, they made a really important new discovery of high grade copper in Ontario. And I've done extensive homework on this project. And I mean, it's really somewhat breathtaking that the all the technical merits, including their recent drill results, and they're cashed up as well, or they're cashing up as we speak, and that's going to load them up with cash. They've got more drill holes pending. They're really understanding this large land package that they have near Batchewana Bay, Ontario, that had seen historical mining on it, and there was other deposits known on it. But these guys have gone full force into the project. They've done a bunch of surface sampling. They're finding all the right minerals that have high grade copper in them, and they found it in their drill holes as well. It's early stage, but I think it's going to emerge and become a very important discovery. And that's why I'm following Sterling like a hawk. And I, even though I'm underwater, I think by about 20 cents a share on where I picked it, I have no concerns whatsoever. I did not buy this stock for short term. I bought this because I think they've got a great discovery, and taking that great discovery forward will help grow them into a much larger company. All right. Another one that's on my top of my mind a lot lately is a company called Kirkland Lake Discoveries. And what caused this movement is that they did some drilling. They had some very good looking massive sulfides, which are what carry gold, copper, base metals, and they came out with very good drill results. Now, this was sort of a first pass at what is a very large geological structure, and it's around the edges of this structure that are really important because it's where the structure and the country rock meet, and these can be conduits for fluids that carry the base and precious metals up to the surface. Okay. And so they did some, I think about 8 or 10 holes, and they had very good results from that. So, and this is a rethinking of a model. And in the Kirkland Lake area, intrusion related, which is this big structure, intrusion related deposits have made up all the big mining operations around Kirkland Lake. But this project was not really thought of as an intrusion related potential. It was thought of as for VMS, or volcanogenic massive sulfide deposits. Think of a volcano bringing the fluids that carry the metals up towards the surface. And the team that runs Kirkland Lake Discoveries sort of rethought this and thought, wow, this could be intrusion related. Plus, they could have orogenic gold. I think they've got an orogenic gold system just to the east of this intrusion related target. And the intrusion related target is massive. It's 17 kilometers. That's huge. And all of that around it is all highly prospective. And they're starting their early drilling, and they're getting joy, getting high grade in their early drilling. And so it's really got me excited. I'm a shareholder of the company, and I like their chances to, well, they just raised, I think it was about 14 million or something like that. So now they're loaded up with cash. They're doing geophysics. They're about to start a 25,000 meter drill program. So you can expect a lot of news out of this company. I think it's going to be a lot of really good news. So take a look at Kirkland Lake Discoveries. Now, another company that is on the top of my mind a lot lately, as well, since before they even started trading, they've been a sponsor and I'm a shareholder. And uh, they've got this project in Nevada called Borealis, the Borealis project. It was a past producer that ran into economic problems when the price of gold was a lot lower, and the company went bankrupt. Waterton ended up getting it. Rob McEwen ended up buying out Waterton's position for vending the project in. So Rob McEwen owns about, I think, around 15% of Borealis. And Eric Sprott's also a key shareholder. They got this fantastic board of directors. Their chairman is Bob Buchan, who was the founder of Kinross. Kinross is now one of the largest gold miners in the world, so he knows how to build these companies. It's run by Kelly Malcolm, who's the CEO, really talented exploration geologist. He surrounded himself with his friends that are, they met when they were working on Detour Mine, which is one of Canada's largest gold mines. Kelly was in the exploration department. Another of their geologists was in the resource expansion part of the company. And then they had one of the guys that was a mine builder for who worked in the early days of Detour and also worked on the Cote Lake mine. And now he's come over to Borealis. And so what they've started out with is they start producing from a stockpile that was there. They crushed that down, put that on the leach pad. That's generating gold now. And in the first quarter of 2026, they're going back into those old pits and expanding those. They're going to start mining those old pits and bringing new material onto the stockpile, then through the tailings and create bars through their ADR plant that's on the property. Everything is permitted, all the power, road access, it's all there. And this is an emerging junior gold miner in Nevada. And those are the reasons they're on my mind a lot lately. So take a look at Borealis. All right. Now, I've got a new addition to my top of mind picks. And this one has come from my developer, my picks of developers. So they've graduated up to a top of mind company for me. And why they've done that is because they are, I think, about over 65% of the way to producing, bringing their project into production. It's copper, gold, and other base metals in this. And I always seem to have one or two companies that I pick before they go up the right side of the Lassonde curve. One of the great picks in that category for me was Pretium in British Columbia in the Golden Triangle. I picked them before they brought that into production. Same thing with Osisco in Ontario, or sorry, in Quebec. I picked them before they brought that project into production. Just in the last couple of years, I had Las Chispas, which was Silvercrest. They got bought out. All of these companies got bought out. And I think that's one of the reasons why I have a soft spot in my heart for companies before they go up the right side of the Lassonde curve. And I really like finding them when they're in that sweet spot, when they ending off development and they're bringing it into production. This sweet spot before they go up the right side of the Lassonde curve is where I get really excited. In fact, I look at them often when they're in the development phases, and then this one I'm picking it right in that sweet spot. And I picked it when it was down around here, I think just under $3 per share. It's done very well, but I didn't pick it because I thought I'd get a 20 or 30% gain out of it in a short period of time. I picked it because as they bring this into production, I think it will be another one of these that ramp up the right side of the Lassonde curve. Will they get bought out? I don't know. I'm kind of hoping one of these keeps going and grows into a much bigger company. But when they prove up that they've got a great mine, they don't seem to last very long before they're taken over. It's very interesting that Pierre Lassonde himself is a big shareholder of Foran Mining, as is Agnico Eagle. And why Agnico Eagle is an important part of this story is that one of the great mines that really was a company builder for Agnico Eagle has a lot of the geological similarities to what Foran is now building. And so I find it, really important to stress, folks, that guys like Pierre Lassonde and the people at Agnico Eagle have done their homework. And I think some of them were shareholders at even higher than the current price. So take a look at Forum. That's why they're on the top of my mind a lot lately. And that's why I've moved them up into my top of mind picks. Okay, major precious metals miners, Agnico Eagle, my favorite major gold miner. They make a lot of free cash flow quarter after quarter as the price of gold has gone up. I picked them originally when they were trading at around $60 on the Canadian. Uh, they closed Friday at 226. They've also come off slightly from their peak price and are now trading right on that 50-day moving average. Every quarter that um, has a higher price, they make more and more money. And they've been making record quarters after quarters of free cash flow. And now we're coming into the best quarter ever for the price of gold. I think that that's very bullish for Agnico Eagle. As I also think what's bullish for them is that they are having no problems replacing their old deposits with new deposits and also increasing their production and bringing their costs down. This is one of the best gold mining companies. I think they are the best gold mining company in the world. And that's why I picked them and why I like them so much. And I think you should do your homework on them. All right, next up is another of my major gold producers, which is Newmont Corporation. I picked Newmont just before they went through their golden cross. I think they were trading at about half price of where they are right now. And they've gone through that golden cross. They're now trading right on the 50-day moving average. Why I picked them at that point was they had gone through their selling of their non-core assets and focusing on maximizing or optimizing their tier one mines. Okay. Plus, they had also bought out Newcrest. So it takes a few quarters for those to integration of two companies of that size together to really start firing on all cylinders. So I picked them after the divestiture of their tier two projects and the full integration of Newcrest. And so since then they've done very well. And I'm hearing some really great rumors that they're on the hunt possibly in their crosshairs is making an offer to Barrick for Barrick's Nevada gold mines. Um, I think there's good synergies there. Whether or not they can pull it off, I don't know. But I do think that Newmont is going to be looking for assets out there that can move the needle for them on their production and on their free cash flow. So stay tuned for that from Newmont. Now, I picked Agnico Eagle. Let me pull up their stock chart again. I picked Agnico Eagle early in 2024 because I was looking for companies that would, I wanted a major because I have in my audience investors that invest in majors because they want to be exposed to gold, but without as much risk in them. So I that's why I picked them way back here when they were trading at about $60 a share. And as you can see, since then, they've had dramatically outperformed the price movement in gold. So as this has happened, gold has was back then trading at under $2,100, and I thought it was going to break out above 2,100 and then make a series of record highs. You can find my comments on that on my Substack at rocksandstocks.substack.com. So that was my rationale for picking them. And as gold has made this series of record highs I predicted, the Agnico Eagle has dramatically outperformed gold. Now, recently I made Pan American Silver a pick because as silver goes, I think that now silver is at that inflection point where it starts to make a series of record highs, and generalist investors are going to be looking for something that does like Agnico Eagle did for gold in the silver space. And that's why I picked Pan American Silver. I picked it down around here, I think, around I want to say about 35. It might have been as high as $40. But they've had a very good run. They've come off like a lot of precious metal stocks, but this is such an extremely well-run company. They got lots of cash. They took over Las Cheese, or they took over Mag Silver, one of my picks. And they got a really good profile of their production going forward, and they're an acquisitive company. I really like Pan American Silver to be my Agnico Eagle before gold went into a series of record highs. I think we're going to see a similar thing happen for Pan American Silver as I see silver going to a series of record highs. Pan American Silver has a lot of cash. I think it's almost double their cash compared to their debt. And so I think they've got over, well, I think $1.2 billion in cash. And uh, it gives them, the investor out there that wants exposure to silver, torque to it, and not a lot of downside risk. That cash position in Pan American Silver really puts it into that category. So that's why I like Pan American Silver. Okay, so now I've got a new addition, brand new pick, and a brand new addition to my major miners, and that is Coeur Mining. Now, Coeur Mining took over Silvercrest, and which was one of my picks that did very well for the Las Chispas mine. And post that, they had a very big run on their stock. And why did that happen? Well, Las Chispas was such a big success for Silvercrest. They brought it into production. They owed $100 million in debt. Within a couple years, they had paid off all of that debt, bought back stock, and had built up about $200 million in cash. And so Coeur Mining, who needed more silver production, plus needed the cash to help bring down their debt because they had built up debt due to one of their other mines being in construction. They bought out, and that helped them on the debt side of things. Plus, Las Chispas increased their silver production and decreased their cost of production. So it was a really winning formula for Coeur. But at that time, I wasn't really convinced that I wanted to make Coeur a switchover pick. And so I wasn't able to wrap my mind around flipping over from Silvercrest into Coeur. They did very well, really happy for them and the Silvercrest shareholders. But as you see there, it topped out at about $24, and then they started coming off like a lot of other precious metal stocks, and then they dipped down again. And why did they dip down? Well, that's the why is why I'm picking them a pick now. They went out and bought or are in the process of buying out. They made an offer for Newgold, and that acquisition will help them make in 2026 $2 billion of free cash flow is the estimated. Now, what often happens is the number crunchers at the big analyst houses and the big brokerage houses, they struggle to wrap their minds around these because they haven't integrated the books, the accounting between the two companies. But and so it takes them a couple quarters before they figure it out, which is kind of why Coeur was trading sideways before the acquisition of Las Chispas. And then when they integrated it, it took off. So, but what gets me confident enough to make Coeur a pick now is that they have been acquisitive. They've been doing good purchases. They're getting a Newgold that will help them increase their production, bring down their costs, and turn them into a $2 billion free cash flow generator in 2026. That brings them up the food chain of the major producers quite dramatically. And they are a go-to top of mind company when generalist investors are looking at silver companies. They're post this merger or acquisition, however you want to put it. They will be in the top 10 of gold producers and the top five of silver producers. I like that combination, especially because they're going to make a lot of free cash flow. And so as it's come off, uh, create an opportunity where I'm comfortable enough to make them a pick. And I really like their prospects going forward. All right. Now I'm going to move to my mid tiers. Um, actually, I need to start moving a little faster. So I'm going to go back to the gold chart. I'm just going to sort of give you my thoughts about these companies. You can look at their stock charts. In the mid-tier gold miners, I have Alamos Gold. Uh, Alamos Gold is one of the best operators of any size, mid-tier or major or junior gold miner. They're making a lot of free cash flow because of the price of gold, and they're pumping all that free cash flow back into creating even more free cash flow. And they've got a lot of new production coming online that's going to get them over a million ounce producer status. And they'll be one of the lowest cost producers of any mid tier or major. And that's going to make them just a free cash flow machine for long into the future. They're kind of underperforming a little bit lately because of the taking all that free cash flow and then pumping it right back into their construction and building up that production. And so they're not building up the cash like some of the other big gold miners. They're spending the cash, free cash flow to make more free cash flow in the future. So I'm a big fan of Alamos, and you should take a look at them. Another mid tier is Aris Mining. They're down in Colombia. They've got one of the highest grade gold mines in the world, which is their Segovia mine in Colombia. It's a great mine. They've got other mines that they're building in their portfolio. Their CEO is Neil Woodyer. He's done this before, and I think this is going to be his swan song in the industry. And he's going to go out as a big winner with the Aris mining operation. And I think they got a really nice growth profile ahead of them. So take a look at Aris Mining. Equinox Gold is another that is, they recently merged and now they've got two big gold mines going into full commercial production. One is their Greenstone mine in Ontario. The other is their Valentine Lake mine in Newfoundland. And collectively, that's going to turn them into a free cash flow machine. They are somewhat underperforming because they cost them about $1 billion of debt to get the Greenstone mine into production. It's a big thing. Okay, it's one of Canada's largest gold mines, and so with Valentine and Greenstone in full commercial production, they'll be able to reduce that debt very rapidly, maybe 18 months kind of thing, or at least get a big chunk of it paid off within a year, year and a half of full commercial production at both of those mines. So Equinox has a very bright future. Take a look at them. Orla Mining. Orla is a company that I picked before they brought their Camino Rojo project into production. It was another one of these ones that I pick when they're in development, and then they start going up the Lassonde curve, the right side of the Lassonde curve. And Pierre Lassonde was a investor in them prior to them bringing their Camino Rojo project into production. Then Orla went out and bought a development project in Nevada, and then they also bought the Musselwhite mine off of Newmont, and so they some of these tier two mines for majors don't get the love that they deserve. And then a smaller miner, a mid tier in this case, it's a company, potential company maker for a mid tier if it gets the love it needed. They've been doing that. They've been working on the mine operations and doing exploration that has now extended the zone or the trend by over a kilometer. And really excited about what Orla Mining is doing. So have a look at Orla Mining. Okay, and don't, all of these companies will be in the description of this video, so don't worry about that. On my junior gold miners, um, I have Heliostar. I'm going to talk about them a little later because they had some news out recently. So just give me a minute to talk about Heliostar. Luca Mining, they're in Mexico, and I think, as I said earlier, as is Sierra Madre Gold and Silver, and I think that they're going to benefit from this recent permitting news from Silver Tiger, and take a look at those Mexican, as is her Heliostar as well. They're all in Mexico, so there you go. I got a new addition to my junior gold miners, which is West Red Lake Gold. Now, they have taken over a project that had been a failure with two previous operators. But they looked at what, well, part of the reason was is that the last one rushed it into production, and they hadn't done enough drilling, and they weren't financed well enough, and they went bankrupt. Then West Red Lake Gold was able to buy that bankrupt asset at a very cheap price when uh, the gold was still a lot lower than it is today. And they've been doing all that extensive drilling. They've gone underground, and they're gearing up to have full commercial production of 50,000 ounces in 2026 from their from the Madsen mine in Ontario. I like what I see, what I'm hearing out of management as far as ramping that up. They're talking about 9,000 ounces of production in the last quarter of 2025, which is very good because this is the best quarter ever to have been producing gold. And then having it in full commercial production for somewhere around 50,000 ounces. So you're not looking at a big difference between 9,000 and 12,500 ounces per quarter. And so they're almost up to that full commercial production. And because their current valuation is very low relative to comparables, I do it on 100,000 ounces. I look at what is the valuation of a company based on 100,000 ounces, and then I in this case I would have cut that in half. And when I look at that valuation, basically they should be getting for 50,000 ounces about $1 billion in market value because there'll be a high grade miner at a low cost, so there'll be a free cash flow machine. So that should get for 100,000 ounces, that's about 2 billion to $2.5 billion valuation for a high grade, high margin producer. And so rolling that back to 50,000 ounces of production, that gets me to about 1 billion to 1.2 billion valuation. And their current valuation is at about 291 million. So getting into full commercial production, I think that there's a quite a significant upside potential on West Red Lake Gold. That's why I'm making them a pick at this point in time. Have a look at West Red Lake Gold. Okay, now I'm down to my developers. Actually, this show is already a little bit over an hour. So instead of giving you my updates on developers, I'm going to go to my explorers, and not to worry, all of the picks will be in the description of this video, but I do have a couple changes to my explorer picks. And so I'm just going to tell you what those are. I'm moving Almadex from an official pick back to my radar screen. The thesis for picking them is they were looking for a porphyry in Nevada, drilled it. Um, they haven't killed it, but they certainly didn't make it live. And the thesis is broken for me. I do think highly of the company, so I will continue to follow them closely on my radar screen. But whenever a thesis is broken on an exploration company, it's time to reevaluate. I've done that reevaluation and I've decided to put Almadex over into my radar screen, so they're not in my current picks anymore. And I'm adding Aztec Minerals, okay? Um, in a second, I'm going to talk about some of their recent news, and that's the reason that I'm making Aztec Minerals a new pick. So I'll get to that now. I'm going to start going into my news release, and I'm going to try and work through that. But one of those will be Aztec, and I think you'll understand why I'm making them a new pick in my list of explorers. Okay, so who do I got here? Okay, this one, Sterling Metals. Sterling announced that they were. Oh no, that's not the one. Sterling announced that they're doing a private placement, and I already talked about Sterling, so I'm not going to talk about that one again. Kirkland Lake Discoveries. Let me go to Kirkland Lake. They just announced that, let me get the news release. Sorry. There it is. News. Kirkland Lake Discoveries announces 25,000 meter drill program. And this is the earlier when I was talking about them, I talked about, well, I think they probably got it in this news release, hopefully. No, they don't, of course, because I needed it. But I've talked to Stefan Sklepowicz recently in an interview. We had a lot of talk about what they were doing next. And then since then, they've announced this 25,000 meter drill program. I already talked about them, so I'm not going to go into this any further, but have a look at their recent news. Sterling Metals, I also talked about them earlier. Their news was that they're doing a $10 million financing, and that will load them up with cash to get after that discovery that I talked about earlier in the show when I was talking about my top of mind picks. So have a look at that one. Coeur Mining, I already talked about them, and that was that they have acquired Newgold, and that's why I made them a pick. So I can go past that. Equinox had their quarterly report out. Equinox delivers record Q3 production and revenue, Canadian gold production increasing, setting the stage for a strong 2025 finish and momentum into 2026. Uh, Actually, Darren Hall's quote here kind of wraps everything up nicely in a bow. So I'll use Darren Hall, who is the CEO of an Equinox. He commented, and I quote, Equinox Gold delivers another solid quarter with record production of 236,000 ounces and all-in sustaining costs of $1,833 per ounce, with Greenstone continuing to improve, Valentine ramping up well, and Nicaragua and Brazil reliably contributing to production and cash flow, we expect a strong finish to the year. The company remains on track to deliver the midpoint of our 2025 consolidated production guidance after the divestment of our Nevada assets and before considering any production from Valentine. At Greenstone, operational performance advanced significantly during the quarter. In Q3, mining rates exceeded 185,000 tons per day, a 10% increase over Q2 and a 21% increase over Q1. Importantly, mill grades improved 13% in Q3 to 1.05 grams per ton of gold. This positive momentum has continued into quarter four, with October mining rates exceeding 205,000 tons per day and mill grades improving to 1.34% or 1.34 grams per ton of gold. This improvement underscores our confidence that Greenstone will deliver a strong Q4 and continue that momentum into 2026. At Valentine, commissioning continues ahead of expectations. From first ore on August 27th through the end of October, the plant averaged 4,992 tons per day, or 73% of nameplate capacity. For October, the plant averaged 91% of nameplate and recoveries exceeded 93%, positioning the team well to deliver into the higher end of our Q4 Valentine production range of 15,000 to 30,000 ounces. With the ramp up firmly on track, I anticipate Valentine will reach nameplate capacity by Q2 2026. During the quarter, we strengthened our balance sheet by reducing debt by 139 million and subsequent to quarter end added 88 million in cash from the sale of our Nevada assets. These actions enhance financial flexibility and reinforce our commitment to balance sheet strength, portfolio optimization, and disciplined capital allocation. With Greenstone and Valentine ramping up, the company is entering 2026 with growing Canadian production, improving cash flow, and a clear strategy to maximize our per share value through operational excellence, capital discipline, and continued debt reduction. End quote. Some numbers that jumped off the page that for me there was going from 185,000 tons per day in Q3 of mining rates to 205,000. So that's a 20,000 ton per day quarter over quarter improvement. And look at the grade. It went from producing 1.05 grams per ton in Q3 to 1.34 grams per ton. So quite a substantial increase in the daily production and in the grade. That's great to hear. So that's the Equinox story. Take a look at them. Okay, next up is Aztec Minerals, my newest addition to my exploration picks. Aztec drills 8.14 grams per ton of gold and 49.67 grams per ton of silver over 36.5 meters, including 58.5 grams per ton of gold and 158 grams per ton of silver over 4.6 meters at the Tombstone project in Arizona. So they give you the drilling highlights there, and there's a really good quote. Where is it? There, Simon Diakowski, who's the CEO, he stated, and I quote, the high-grade gold intersection drilled in TR 2517 represents one of the strongest gold results encountered to date at the Tombstone project and advances Aztec's track record of high-grade precious metal discovery that the historic Tombstone Silver District is best known for. The strong early results of our recently expanded drilling program support the continued growth and expansion of the now significant shallow oxide gold silver mineralization target. End quote. Those are some really spectacular grades. If you can get at them with the open pit, wow, it'd be just a free cash flow machine. Let me see if I can find you some maps there, being the map junkie that I am. They don't, but I did listen to a recent interview with Simon, and he talked about them being loaded up with cash. They have more assays to announce. They're doing expansion drilling on beyond the known pit, and so they got a lot of drill results ahead of them. Here it is, section view. Hold TR. There we go. So here's the pit. That's the contention pit. They've been drilling underneath it, and look at these high grade hits that they're getting. Real beauties in there, folks. So they're expanding, and it looks like they've got their handle on where to go to find more. And they, I really like what I see from this project. Let me switch back. Uh, okay, so what I'm going to do with Aztec is I'm going to reach out to Simon Diakowski and get an interview with him. I wanted to let everybody know that I'm making them a pick now, and that I'm going to get try to get an interview with Simon. So I won't go over all these results, but they are getting a string of very good results from their drilling and take a look at Aztec Minerals. Okay, Power Metallic had some news. Power Metallic intercepts 5.35 meters of 11.97% copper or 16.35% copper equivalent in hole 25022 infill drilling, expanding the Lion Zone and updates on fall winter drill program and land assembly. Now, the crazy thing is, to get that kind of grades, and their stock is down since they put this out. It's just nuts to me. This is a great discovery they have. It's still wide open. Who knows where it's going at depth here? It looks like it could be trending in this direction. They've got reasons to believe there's more over here, and going in a long strike. And this Lion Zone is something special. You just don't see projects with that kind of grade. And it's quite spectacular project. And, it's still about 25% higher than when I picked this company. But they were 100 or more percent gainer after I picked them. And, when you see these kind of results, you just got to put it in context. And you just don't see this very often. So have a look at Power Metallic. Provenance Gold. I've never talked about Provenance Gold, but they popped onto my radar screen because Provenance discovers new mineralized zone at Herman, assaying 5.94 grams per ton of gold over 19.81 meters within 1.56 grams per ton of gold over 254 meters from surface, extending mineralization to the south. So this project is in Oregon, El Dorado Gold Project in Eastern Oregon. Um, there's the highlight holes, new mineralization. Uh, they talk about their current exploration is ongoing with assays from 7 drill holes still pending. Uh, their Chairman Ranu Purtu stated, and I quote, "Hole ED29 is a pivotal hole in this step out program. We've already demonstrated that gold is prolific at El Dorado West over a large area. We're confident much more mineralization exists within both the previously explored area and within this large new unexplored region. I'm excited because I think the system appears to be strengthening into this broad unexplored area with no outcrops or prior exploration. Historic gold mining of locally derived placer gold along its borders to the south and west, and our geophysics and geochemistry support our belief that the gold system continues and potentially strengthens into this unexplored area. We have just scratched the surface of this amazing property, and we haven't even begun tackling El Dorado East yet." So this gives you some highlights, assays pending. All of these holes over here are assays pending. Uh, one over here is three over here are assays pending, and then they got these high grade hits, and one is planned. Two are being drilled right now, so they're going to have a lot of news. Let me just pick up this because I think this could be another addition. Hold on. Let's have a look at their stock provenance. Okay, so they've recently gone through a cup, going up the right side of the handle. And yeah, I'm liking what I'm seeing. I see a golden cross here. I'm ready to make Provenance Gold a new pick as well. And I'll be putting this in my Explorer category, PAU. Yeah, let's follow this one closely and see how the drilling assays pending, the new drilling and the planned drilling comes out. But yeah, I like what I see. Like me some high grade. Heliostar. Heliostar announces PAA for Ana Paula underground with strong economics and sustainable cash generation. Heliostar is a pick. It's been a very successful pick, but I didn't pick it for the short term. I picked it because I think they're going to be a big winner. Let's see. Uh, their CEO always wraps things up nicely. So let's have a look at their quote. Heliostar CEO Charles Funk commented, and I quote, "Today's PE demonstrates Ana Paula can be a low capex, high margin gold mine. Ana Paula is expected to drive the company's transition to mid-tier status in 2028 by significantly expanding our production profile at one of the industry's lowest cost bases. As we proceed with the feasibility study, the current 15,000 meter drill program, engineering, and metallurgical programs all have the potential to improve the mine's economics and are being advanced with the aim of confirming a mine life of at least 10 years. The company plans to accelerate key development steps to bring Ana Paula forward, including a restart of decline development in 2026. This early access to the deposit will allow us to further de-risk development and provide a location to conduct exploration drilling, to test for a potential larger deposit at depth. We are excited at the prospect of bringing Ana Paula into production as a robust free cash flow generating mine that will underpin Heliostar's share price for the next decade. Okay, let me just grab the key information from these highlights that I'm not a big fan of these NPV things. I pay attention to things like 51.3% internal rate of return with a 1.9-year payback at a $3,800 gold price, 874,000 ounces of gold production. 101 of those will be on an annual basis after ramp up. Life of mine average all-in sustaining cost of $1,011 per ounce. Folks, that's phenomenal. That's like $3,000 of free cash flow multiplied by 100,000 ounces per year. Those are the numbers that just dance to me. Another is only a $300 million capex to bring this into production. And I think you're looking at very rapid payback of that. I mean, look at it, folks. 3,000 times 101,000. That they're paying that capex back really quickly. All right, so that's the Heliostar announcement, and I'll let you do your homework on Heliostar. I'm a big fan of the company. Inventus announces bulk sample processing underway and provides a drill program update. So they got a 4,800 ton bulk sample at McEwen Inc.'s mine or mill at the Stock Mill, not too far away, and they're going to process that and recover the gold from it. Uh, the drilling in around it had an average thickness and grade. The grade average was 3.84 grams per ton of gold and 1.82 meters of drilling over 28 drill holes. Um, Phase two program completed to date for 1,000 meters of drilling. They can drill a whole bunch of these holes really shallow because this deposit that they're looking at is right at surface. It's a conglomerate that is right at the surface. And so, yeah, let's see what Wesley Weimark, President, Head of Exploration, commented in a quote. With bulk sample processing now underway, we're entering an exciting stage that will demonstrate the economic potential of Pardo's unique shallow and flat-lying paleoplacer gold system. Combined with our ongoing drill program, we are continuing to de-risk the project while laying the groundwork for understanding the grade, scale, and continuity of gold mineralization across the property, end quote. So there you go. Inventus making news, and we'll have more news to come. I think that is almost it. Oh, yeah, I got one more. IDEX. IDEX. IDEX Metals expands mineralized footprint at Freeze property with discovery of new breccia zone and Newgold zone. Uh, IDEX reported the discovery of a second mineralized breccia body located 700 meters north of the current drilling at the Kismet breccia complex on its 100% owned Freeze property in Idaho. In addition, field crews have uncovered a new gold-bearing zone approximately 950 meters further north. So there's a lot of exploration going on in Idaho right now. IDEX is in the heart of that, and I'm really impressed with what they've found. They're kind of focusing where these other companies are focusing on chasing deeper for deep porphyries. These guys are focusing on what's really close to the surface in these breccia complexes, and breccia is where the rocks are broken up and the fluids from a porphyry below make their way up these broken rock packages called breccias. And they make their way right to the surface in this case. And they can be mines all on their own without even finding the porphyry. I like the chances of finding the porphyry, but I like their focus on what they know is right at the surface and then using that to vector deeper. And I like that strategy. Key highlights: North Breccia discovery, second copper bearing breccia body identified 700 meters north of Kismet with malachite chalcopyrite mineralization in porphyritic granodiorite, expanding the mineralized footprint. Don't worry about those. There's just that's what oxidized copper and copper mineralization come from. So little translation of the geospeak, it's what they're looking for. New gold zone, frostfall. Discovery of a gold-bearing zone 950 meters north of the North Breccia returned 2.91 grams per ton of gold, indicating a new structural gold trend north of Placer Creek. Zone metal system emerging. Over 2,300 samples define a copper molybdenum to copper gold transition, confirming a large magmatic hydrothermal system across the freeze property. Geophysics confirms continuity. MT survey reveals northwest to southeast resistivity trends linking Kismet, North Breccia, and Frostfall, and outlines a connected intrusive hydrothermal corridor along Hornet Creek. Next phase underway. IP and ELF surveys. These are geophysical surveys, folks, along with pending drill results from holes uh, 03 to 005 will guide 2026 drilling and further expand targets across the property. Clayton Fisher, who's the CEO of IDEX, commented, and I quote, the identification of a second breccia system in close proximity to Kismet, along with a new gold-bearing zone to the north, underscores the presence of a large, possibly multi-center magmatic hydrothermal system at Freeze. IDEX expanding data set continues to reveal a robust copper molybdenum copper molybdenum gold system with significant potential for scale in the United States, end quote. Here is where they show you where the drilling is. Here's their North Breccia. Uh, Here is their the past mine on the property. Here is some of the creeks that are going through it. So this can give you some ideas of structures that are coming along in here. I see one from east to west here that's quite interesting. Um, uh, why am I having, hold on a second here. So here is the Kismet. That's the one they're drilling now. Nice geophysical anomaly there that seems to extend quite a distance over here. Here's their North Breccia sitting right over a geophysical anomaly, Frostfall, and you've got 1,800 meters between these three. This whole thing could be connected, and you may not have to go farther down here to find out what's causing these breccias here could be coming off of porphyry. Maybe that's what this is indicating here in the resistivity. Um, this just gives you a tighter look at the North Breccia, or sorry, yeah, the North Breccia there. I think this is yeah, this is resistivity as well. Where is the more resistivity? Here's Kismet. Looks like there's some good stuff happening up there. Okay. So yeah, good stuff on IDEX. I got to try and get their CEO on for an interview. I'm gonna reach out to him on Monday, see if I can get them on for an interview. But yeah, I like this IDEX story a lot. And there you go. Alrighty, folks. Well, hour and a half show, almost 2 hours. Uh, I think I made my case of why I think gold is going higher. It's already going higher in the futures trading so far today. Silver, silver's up as well. Copper, let's make it three for three. Yes. My three favorite metals all on the upside in futures trading on Sunday night. All right. As always, I'm not making buying or selling recommendations. I'm merely an idea generator. I use my 30 plus years of experience, having worked with great mentors in geology, geophysics, and geochemistry to help me filter and find the wheat through the chaff. But it's important for you to speak with your financial advisors to assess your risk tolerance and do your homework. That homework is the biggest thing I think if I offer any advice to anybody, it's do your homework. Understand the metals that your companies are involved in. Understand the companies as best you can and their projects, because that way you make better decisions that are not based on short-term fluctuations in stock prices. It's based on projects and people and what they're doing and financing. And that's the homework you want to understand these companies. It's not just do your homework when it comes to mining companies. It's do your homework when it comes to any company. Those that are the most well informed or have always, throughout my 40 years or more of following the markets, those are the ones that have always done the best, and you should do that as well. All righty, that's my show for the weekend. Have a great day, evening, afternoon, wherever you are in the world watching this, and we'll talk